what is sustainable investing and how does PIMCO approach ESG?
ESG-focused products, generally speaking, are distinct from ESG integration. There's a difference there. Integration means integrating material ESG factors, risks, considerations into an overall research process. In other words, the incorporation of material ESG factors that could impact the long-term creditworthiness of an issuer can help investors form a more accurate understanding of a company's risks and opportunities and therefore relative value. At PIMCO, our investment platform rests on two broad pillars. On the one hand, ESG integration for the platform as a whole. There, we define integration as the consistent consideration of these types of factors into our investment research process. That can include, but it's not exclusive to, climate change risks, diversity, inclusion, social equity, regulatory risks, human capital management, and a variety of other considerations. For our ESG funds, we have designed solutions for clients that incorporate and really optimize for these sustainability-related objectives. For example, a reduced carbon footprint, active engagement with issuers and counterparties, significant green bond allocations and other types of labeled bonds, and a broad tilt towards higher quality ESG issuers as determined by our own research as well as external sources.
Jelle, we recognize that climate change will have a profound impact on the global economy, financial markets, and issuers. Can you make any comments about climate considerations in our investment process, and how do we incorporate climate risk analysis into our research?
Yeah, thank you. So at PIMCO, we've developed tools and methods that seek to incorporate over time material climate risk evaluations in our investment research processes. So our research typically begins with two broad segments. So first of all, the transition risk. For example, tighter regulations on carbon emissions. What impact does it have on these issuers? Most importantly, then the second category, physical risks. How the rising intensity and frequency of extreme weather events affect critical assets and natural resources used or relied upon by the issuer. We are part of the Climate Action 100+ initiative. That is an investor-led climate engagement coalition that works with selected issuers among the largest carbon emitters in a broad range of sectors. So we encourage issuers to establish ambitious and achievable climate targets in line with the Paris Agreement on climate change and advance their efforts by issuing a green bond or even a bond linked to those United Nations Sustainable Development Goals, the SDGs.
Can you highlight one case study each that illustrates the ESG process elements that we have just discussed? Maybe Grover, we can start with you.
Sure, happy to. I'll start with a situation that's particularly relevant coming out of COP26. We completed an investment in an emerging market-based development bank. It was a very active engagement conversation in which PIMCO encouraged more proactive milestones and goal settings in the future with regards to the presence of coal in the lending book and business model. Ultimately, the commitments couldn't meet where we wanted that issuer to go, but still provided a great opportunity for the platform at large with regards to our integration efforts. Green bond that made a lot of sense for our non-ESG funds. And we're optimistic that with continued engagement, now that we are a sizable lender with a great relationship there, that as that issuer continues to make progress from an ESG standpoint with regards to climate and coal, that future issuances will be great fits for our specific ESG vehicles, given the changes, hopefully, in the future of the business mix there.
From a portfolio management perspective, our ESG funds have been looking at ways for incorporating trades that benefit from a reopening of the economy. That has been a key trade for all our PIMCO clients. For example, the airline sector has benefited from a gradual reopening of the economy. But, one has to acknowledge that some of these sectors, like the airline sector, like the energy sector, are not appropriate for ESG funds. So how to implement that COVID-19 reopening trade in the ESG funds? So we've been tilting quite significantly, for example, to office real estate investment trust, primarily by participating in the green bonds. Those issuers were still trading at very significant wider spreads not so long time ago. Also via specialty retailers that have incorporated sustainability practices. And also the leisure sector like hotels. So this is, from a portfolio management perspective, a way of putting the same trade on, but in a much ESG-friendly way.